When you attack the world's largest oil refinery and exporter of oil, when you block the Straits of Hormuz, gold's up a little bit, silver's sold off. The last thing that the powers that be want in the midst of some sort of a global conflict is to see gold and silver go to the moon, the dollar to sell off, the markets to tank. Bank of America just said maybe one of the boldest silver calls ever. Head of metals research, Michael Widmer, said silver can reach between 135 and 309 by the end of this year. When you see in the month of February, roughly 15 million more ounces left the building than deliveries can explain. 4 times in 2 months, we see markets that glitch, twice to the up, twice to the down. When they fell both times, oh, sorry, the circuit breakers broke. We apologize. Don't do anything about it. We just let it collapse. And on the way up, oh, sorry, it overheated and we didn't even figure out what the last one was, where the market was halted, trading was halted. In both cases, they got slammed. Last time this happened, silver went up 120% in 60 days. When you attack the world's largest oil refinery and exporter of oil in Aramco, you have the makings of some very interesting economic times. Much higher inflation, much higher as a result of much higher oil prices. When you block the Straits of Hormuz in conjunction with this, you're adding fuel to an already burning fire. You know, it's interesting, Dunnigan, I go back to one of my very first years in this industry, family vacation with my parents, my sister, and I remember the original Gulf War, and from that day forward, every single time we get into a conflict like this, which there's been quite a few, one would expect the price of gold and silver to take off, and really take off. I've always looked to what Jim Sinclair said, called it MOPE, Management of Perception Economics, that seems to rear its head at the beginning of every one of these conflicts, where we will see management of the escalation of the metals prices. We will often see the equities markets outperform. We will see dollar intervention, the dollar stay strong. In other words, the last thing that the powers that be want in the midst of some sort of a global conflict is to see gold and silver go to the moon, the dollar to sell off, the markets to tank, as many people would expect. The financial engineering is always something that amazes me, the ability of what they're able to do. But I would say that this will be, you know, at least in the case of gold's up a little bit, silver's sold off, and you know, on top of everything, this comes in the face of what Bank of America just said, maybe one of the boldest silver calls ever. You know, their head of metals research, Michael Widmer, I think is his name, said silver can reach between 135 and 309 by the end of this year. And, you know, he wasn't even talking about this. He was talking about the gold to silver ratio and the reality that silver tends to lag gold early in the bull market, and then in later stages it moves violently. So anyways, the bottom line is that what we are seeing globally, I think, is probably far more impactful than the markets will lead us to believe, at least initially. So I would urge everyone to pause and have a little caution in terms of the way they think things are going to play out here over the next several days, and we'll see what happens ultimately to the price.
You know, we spoke several times we've had Bill Murphy from GATA.org on. We've had Ed Steer from GATA.org on. He's going to come on again this week. We've had Rick Rule talking, all of us talking about how vulnerable the precious metals, particularly the silver market, is to potential manipulation or interference. No. And Rick Rule, even perhaps the least conspiratorially minded of any of the guests we have on, says that if the powers that be can manipulate the treasury market, the U.S. treasury market, bond market, which is arguably the largest and most liquid market in the world, then silver, which is one of the smallest And sometimes we've seen recently illiquid markets in the world should be a piece of cake. And the other thing that we talked about with them is how if you look at the night versus day, because these markets are open 24 hours a day if you count the after hours in the Asian, you'll talk about that, but you'll see that even last night and early into the wee hours of this morning, silver was holding above 95, 96, that kind of thing. And then there was just two, boom, just waterfall type drops today that happened within the past couple hours. And just to get your commentary on this, what do more natural markets look like versus what do markets where there's drive-by shootings, as you've called them in the past, look like?
Yeah, well, I mean, this is not really how free markets are supposed to operate. And usually you find this at the AM and the PM fix, somewhere 2, 3 in the morning, Eastern time. And then again, as we head into New York, the metals get smacked. To your point about Rick, far be it from me to ever question the wisdom of someone like Rick, who has seen more than I have and might be one of the smartest people I've ever known. But I will say one thing: if I were going to try and quietly push back against Mr. Rule, I would simply say that yes, this is true, especially when no one ever stands for delivery. But the amount of delivery that we see is making naked shorting a very, very dangerous game and continues to play into the hands of those that are standing for delivery. And I think that that's really the crux here. What is changing the landscape of the metals market, in my mind, is a system that has lost its integrity and a system that no longer carries the kind of trust that it needs to have to be the global benchmark. When you see a market in continued backwardation that is normally never in backwardation, it's normally in contango, where the current price is less than the futures price. The futures price takes into account interest, storage, the cost of money. But for a long period of time, it continues to trade in backwardation, meaning we want it now. We don't trust the future. We don't trust the exchange. We don't trust any of it. We want it now. When we see repatriation from the central banks, from the Bank of England, the New York Fed, that means we don't trust the system. And when you see in the month of February, roughly 15 million ounces more delivered off of COMEX than was delivered into the exchange, or should I say leaving COMEX than was delivered into COMEX. In other words, 15 million more ounces left the building than deliveries can explain. You begin to understand a trend, and that is a trend of erosion of confidence and trust in the paper market, continuing to short that market when there are very well-heeled and sophisticated traders, from central banks to sovereign wealth funds, standing for delivery, where price misdirects most people and most institutions, but not these folks. It's a dangerous game, and it's one that won't end well, in my opinion. You're beginning to see that. Now, I would simply say, if I had to guess, the folks that are standing for delivery are far more sophisticated than they are emotional. And the emotion is, well, they continue to be able to do this. How can they continue to do it? How can they continue to suppress the price? They'll do it indefinitely. But they won't, because the demand for delivery continues to outpace expectations, continues to outpace any precedent. And so this is the little by little by little, and that's the part people have a hard time with. This entire era of instant gratification and it not being fast enough, I think, is being attacked methodically and in a very regimented way, where they will continue to slowly bleed dry the exchanges at a manner that doesn't stop everything in its tracks by just throwing all the money and say, no, we want delivery. They will play the game until the game is no longer able to be played. So I don't know. I just think that Rick is right from a standpoint of recency and normalcy bias. But if indeed these deliveries continue the way that they have, these games will end up being an existential threat to those that are silly enough to suppress the paper price to that degree. Once that suppression begins to fail, I think things become very, very interesting. And that's why gold and silver matter so much. It's never just been a commodity. Gold since ancient civilizations, gold has been treated as something different, transcendent. And I do, if we have time, want to talk about, I was just thinking about it the other night. I'm trying to relate it, going back as far as I can, to the way that cultures look at it. So at the end of this, if we have a couple of minutes, I'd like to just talk about something neat that isn't about what's happening today, but looking at gold in a much bigger, I don't know, I couldn't fall asleep last night. I'm just thinking about this. I'm like, wow, that's kind of interesting. So if we get a minute, I'll talk about it. But yeah, as far as what we see right now, that is what is happening to me, is that a world that is based on paper promises that really can't deliver or aren't delivering, running headlong into physical reality is something that I think will continue to materialize and favor physical holdings. So this is just a bunch of noise right now.
To augment that question, that rhetorical question about what is the value of a contract that is unable to deliver, it actually pushes a little bit farther. It's because the natural answer that comes to you might be, well, it's worthless. It's zero. Is the worthless of a contract that can't deliver? But I think from a preparedness standpoint or an alternatives, if you're looking at what your alternatives are at any point in time, it's worse than zero, because you lose opportunity cost. So if you think, well, I could go this way, and I'm gonna trust in my government, I'm gonna trust in my dollar, I'm gonna trust in my treasury bond, I'm gonna trust in these markets, and I'm not gonna put my trust over into preparedness and assets that would make me better prepared. Then when these go to zero, because these promises can't be kept, I've lost my opportunity that I had back there to make preparations at a time when it would have served me well. So I'm not just zero, I'm behind because I lost the opportunity. Any further thoughts on that?
Yeah, I mean, exactly. That's exactly what it is. And because you're preparing in a way that is counterintuitive to conventional thought, conventional investing, and you're putting your eggs on that side of the table. Well, if things don't play out the way that logic would dictate or you anticipate, sure, there's an opportunity cost in everything that we do. And that's the hard part for people to get. That's why it's easy for, financial advisors to say, well, done again, you're making the wrong decision, sir. This is what you want to do. You can only manipulate a market for so long by pushing it in the direction that it is going. When you have the world moving in the other direction, you end up doing something very risky. When everyone is clamoring for physical possession and you have unlimited paper promises that have the ability to stand for delivery, at some point you've outplayed your hand, and there will be entities that will stand for delivery with unlimited funds just like you, and that will challenge you. That's really what we see happening for the first time ever. We're seeing the Western markets and the hegemony associated with them be challenged simply through rules that they employed themselves. Now, in an effort to mitigate said rules, 4 times in 2 months we see markets that glitched, right? Twice to the up, twice to the down. When they fell both times, oh, sorry, the circuit breakers broke, we apologize. Don't do anything about it, we just let it collapse. And on the way up, oh, sorry, it overheated, and we didn't even figure out what the last one was, where the market was halted. Trading was halted. In both cases, they got slammed. And then in both cases, well, we haven't seen what will happen here. But last time this happened, silver went up 120% in 60 days. So we'll see if that happens again here. But what you are witnessing to me is the realization by some very big money traders that they have these Western entities that are playing this game kind of trapped in the respect that let them keep playing their game, we'll keep standing for delivery. And you can see that in the ever-increasing delivery numbers. Someone or someones are saying, fine, go ahead, knock it down. We will continue to stand for delivery. And that plays right into the hands of those that look at the dollar price as one that is certainly valued, I think, less than the dollars used to buy it, or more than the dollars used to buy it, rather. They don't care what the dollar price is. They're continuing to stand for delivery. And when you see the outflows out of COMEX outpacing the deliveries into COMEX, that's about as rare of a bird as it gets. So you're beginning to see the other side of the coin quietly playing their hand right into, I think, using the manipulation of the Western banks to their advantage. So it's not going to last forever. It's frustrating that it continues to last, but these are desperate acts by desperate entities who are playing by rules that are beginning to become obsolete, in my opinion.